Welcome back, everybody. In today's video, I am going to pull back the curtains and I'm going to show you guys an example of a strategy that I trade in my fund here. And before we get to it, I just want to, especially for those of you, this is your first time tuning into the channel, this is my longest running track record here. So you know I'm not just another fake guru who doesn't know what the heck they're talking about and is just repeating all of the SEO slop that all the other fake gurus on YouTube continuously spout. So this has been running for almost 2 years. This is the longest running track record. This is a live account. It's the exact same trades that are being copied over from the master account here. And yeah, doing pretty well. So with that out of the way, let's go into StrategyQuant X. Here's the thing, guys. So if you are learning how to trade and you're a beginner and you search YouTube, you'll probably find tons of videos, especially podcast episodes, where you get these fake gurus talking about breaking down their super secret hidden strategy. And they're sometimes going on these podcasts for like 30 minutes to like an hour, just talking complete nonsense, right? They're talking about all these different rules that they have to follow. It's so complicated. And half the time, a lot of the stuff that they're saying is super subjective and is very wishy-washy, open to interpretation. It's not something that is easy to actually copy over because it is very easily misinterpreted, right? But I'm going to hopefully show you today in this video that successful strategies do not need to be complicated. In fact, a lot of my strategies don't even use indicators. I know, it sounds pretty crazy, but I'll show you what I mean. So I'm going to pull up an example of a Bitcoin strategy that I generated with my workflow here in StrategyQuant X. And as you can see here, I've loaded up a lot of Bitcoin strategies that I've created here. StrategyQuant X makes it super easy to generate ideas. The hard part is whether these strategies that you find are actually robust, and that is where the majority of your energy should go towards. So you might be wondering, well, what is an example of a strategy that fulfills all of your criteria? So I'll show you right now. So this strategy right here, I got pulled up. This one, like I said, trades Bitcoin, and it trades both long and short here. And we can see here that throughout its history, this is the earliest data that I have, 2017, all the way to the current day here, okay? So it trades long and short here, and it's not indicated here, but in my workflow, the out of sample is starting from 2021 all the way to here. So this period right here up till 2021 is the in sample period. Okay, so this is the period that the StrategyQuant X's genetic algorithm uses to train on. Okay, and then this period here from here to the modern day, this is all out of sample. Okay, so this is all kind of a, I guess you could say, simulated live conditions. Not truly live, of course, because it's still a back test, but it is data that the model has not seen, and we use this for validation. That's what out of sample means. So yeah, you look at the graph here, and that is the majority of this back test is out of sample. So that is a really good sign if the majority of the back test is out of sample and it still performs. Okay, especially, I don't know exactly how many trades that is, but since that's over half of its history, we can assume that it's about half of these trades are out of sample, which is personally gives me a lot of confidence and really does show good robustness. Okay, you can see here this one strategy alone, pretty much a 2 Sharpe ratio, very, very strong, very nice profit factor here. You can see it is a below 50% win rate, which means that it is asymmetric. The winners are bigger than the losses, and yeah, this is risking $1,000 each trade. That's how I have it set up here. And what else can we see from this? So one really nice thing about this, actually, before I get into that, you're probably wondering about the logic of the strategy here. Now, like I said, it does not use any indicators in terms of these signals. This is what it uses to determine when to go in to the market and out of the market, okay? It is looking at whether the previous week closed up. If it did close up, then it'll place a stop order, okay? Sorry, it'll place a stop order at the highest high of the previous 50 bars if it is a long. And then if it closed down, then it'll place at the lowest low of the last 50 bars a stop order. Okay, it's that simple. No other indicators. Okay, stop loss. The only parameters that this has is a stop loss coefficient, which is, let's see here, basically looks at the ATR. Another way to say it is it looks at the volatility of the previous 157 bars, and then it takes twice the average volatility to place the stop loss. Okay, and then trailing stop coefficient. I won't get into that, but yeah, that is it. Super simple, amazing results here. I find that the more complicated that you give it, the worse your results. And the reason why is because the more filters that you add, the more indicators that you have, the less trades that your strategy takes, which means you have less sample size, which means that you have less votes of confidence that your strategy could have an edge. So all of these gurus who do not have any idea what they're talking about will say, oh, you need to, filter out your losses. You need to add this indicator in. You need to add that indicator in. You need to put this regime filter in. You do not need to do that. Okay. In fact, it will probably hurt your chances of your strategy actually being robust. Because remember, we're not trying to create a pretty looking backtest. We are trying to find robust strategies. That is the key difference. Okay. Now, one other thing that is really nice about this and shocking is that this strategy here works on many, many different markets. And this is one of the key tests that I have in my workflow to determine whether a strategy is robust or not. So we can see here, let's show the portfolio parts. I've run it on all of the exact same strategy, exact same parameters. I've run it on many, many different markets. Okay. And we can see that it's not just working on Bitcoin, but we can see this, this purple line here, I believe it's gold. Initially a little rocky, but for most of its history, it's gone up. This had a really good year here and has continued to go up quite a lot throughout its history, right? We also have some other nice curves here. Not all of them are personally tradable, in my opinion. But yeah, we have the original one here in this thick line. We have a lot of other good ones here. I'm trying to figure out, I think that one is the euro dollar, this curve, this orange curve here. So it works on some Forex pairs, but you know my stance on Forex if you've been watching my other videos. Okay, I would not recommend Forex, but despite Forex being a terrible market to trade for CFDs, at least, this strategy actually works in Forex. What else here? Well, I won't go too in depth, but the point is that all of these different markets with varying degrees of correlation to Bitcoin, it works. Okay, and this is with zero fitting, zero tuning, zero tweaking, right out of the box. First shot, it works pretty well on a lot of these different markets. Okay, so this is essentially another form of out of sample testing, right? And if we go back here and we look at the portfolio, we can see that the entire portfolio of all those different markets has generated 65,000 trades, right? Now, you recall earlier how I said about 1,000 of the original trades on Bitcoin were used as the in-sample period, right? There was about 1,000 trades that occurred in the in-sample period, right? Followed by roughly 1,000 trades in the out-of-sample period, right? Now we go back to the portfolio, right? Let's consider that the vast majority of the trades here are out of sample, right? You take this number, subtract about 1,000, that's about 64,000 out of sample trades. That is insanely powerful evidence that we may have found a real edge here, right? If it works in so many different markets, out of sample, zero tweaking, especially if those markets are not very correlated with Bitcoin, right? That is an example of a strategy that you could potentially trade on your own. Go ahead. I don't mind if you steal this. I'm giving it away in this video. But of course, the real thing you need to do if you want to become a profitable trader is don't just rely on one strategy. You need to create a portfolio of strategies, right? So even if you were to trade this on your own, I don't mind if you want to take it, go ahead. But you will not be successful with just this one strategy. You need a process or a workflow that you can repeat and generate hundreds and hundreds and hundreds of different strategies that are robust, that you can then assemble into a portfolio, and one that is uncorrelated. That is the key, right? So that when one zigs, the other one zags, right? When one wins, the other one loses, and they make up for each other's losses, and it smooths out your return over time, okay? So hopefully that's given you some ideas. That's an example of a super simple, robust strategy that I trade. You do not need to overcomplicate this, guys. Finding ideas is the easy part. If you're searching YouTube, looking for what's the best indicator, what's the best trading strategy, you are already going down the wrong path. StrategyQuant X, the software that I'm using here, makes finding ideas trivially, stupidly simple. The vast majority of your effort should be spent creating a workflow that is trying to break those strategies, that is trying to test for robustness, right? That is where you should be spending most of your energy. Anyways, I think that's it for this video. Hopefully it helps. Let me know if you have any questions down below. As usual, guys, you want to grab the exact workflow that I use to create this track record here and this one here. You know what to do. You'll find the links down below. Take care, guys.